the appetite of TradFis to start moving balances on chain and to prepare for that moment, I'd say is higher than anything I've ever seen. And I've been working with TradFi since 2016 on the topic. It's night and day difference.
Really? How are you seeing that?
Everyone wants to get involved. Quite frankly, everyone's worried now about, missing the moment.
Alrighty, everybody, what is going on? Welcome back to another CYPRX video breakdown. In today's video, we're going to be discussing and talking about some ongoing DeFi developments, showing you all that now more than ever is the time to start to shift your mindset from this HODL mindset to how can I turn my assets, my crypto assets, into income generating assets to start earning yield. With that being said, hopefully you guys enjoyed today's video breakdown. We're going to be going over some different panel discussions and some breaking fundamentals that are taking place in the ecosystem as we speak. Starting here with this announcement from Doppler Finance. This just goes to show the shift in mentality via large organizations in this space that are allocating massive amounts, millions of dollars of money into the crypto ecosystem with purchases into digital assets like XRP. A NASDAQ-listed XRP treasury company, Vivo Power, will deploy $30 million with Doppler Finance as the first stage of its planned $200 million XRP treasury yield program. Now, we have covered this in previous video breakdowns that you all can find in detail for free on the CYPRX YouTube, where we discussed and talked about this $200 million XRP acquisition for their treasury yield program. But recently, Doppler Finance is setting the institutional standard, according to this post, for XRP-Fi, where they said stop holding and start earning using Doppler earn yields. Now, I'm not standing by this platform, this protocol, telling you guys to go out there and deploy your XRP, but this just goes to support the transformative mindset of HODL your digital assets, particularly in this case, XRP, to start earning passive income, to start generating yield. And whales are doing this with the $30 million acquisition into Doppler Finance. Now, this takes me over here to this post. Just holding and trading digital tokens like XRP, Bitcoin, and HBAR, you name it, doesn't matter, is not enough. Don't take it from me, take it directly from the DTCC. Learning how to use your crypto as collateral isn't optional. It's the key to surviving and thriving in the new financial era. And in today's video breakdown, I hope to show you that that is to be the case. People think that the most important thing is liquidity, the ability to convert the dollar, in this case, to crypto and crypto into dollars, i.e. trading activity. But the truth is that the foundation of finance is collateral. Every day, trillions of dollars move through lending and borrowing, where quality assets are posted as collateral, cash is borrowed against that asset, and liquidity flows. DeFi education now more than ever is an absolute must. So take a second and listen to Dan Donnie from the DTCC tell you guys that this is to be the case.
The one right to win that DTCC has in this model is we are the record keeper for quadrillions of dollars of transactions, but for fundamentally assets under record, approximately $100 trillion worth of assets. So unilaterally, without the need to engage anyone else, we can actually make it possible to tokenize $100 trillion worth of value. No one else can do that efficiently. So we have both a right and a responsibility to do that effectively for the financial markets, because it unlocks so much among those things that it unlocks. So we're building out those rails to do that, to make it so that parties can, within seconds, convert any traditional holding into token form to conduct transactions. But tokens themselves really aren't game changers. They're just another database. A database with benefits, to be sure, but just another database in the end. It's actually what you can do with tokens that makes the big difference. And the foundational transaction in finance is collateral. So most people think liquidity really comes from trading activity, that's what makes a difference, my ability to convert dollars to shares of Tesla. Yeah, that's important, but by far that's a drop in the bucket compared to transactions in liquidity that have to do with borrowing and lending. So there are transactions. Repurchase agreements are the way that banks get liquidity. So they take assets, high quality assets like treasuries, and when they need cash, they post them as collateral and borrow cash from one another in a model called repurchase agreements or repos. That transaction is the most dominant transaction of any globally on a daily basis. I forget the number, over $20 trillion a day. I think it's even more than that. But anyway, roughly that amount is in that transaction. Well, it turns out blockchain is the perfect technology. Perfect. It's like tailor-made. It's the killer app for blockchain to do collateral management. Why? Because you can encode the locking rules into smart contracts.
So you all just heard directly from Dan Donnie, particularly mention that tokens themselves don't really have any intrinsic value. It's what you can do with the tokens, the digital tokens themselves, that brings them utility. Having the ability to post crypto as collateral unlocks a huge amount of possibilities and utility in said digital assets. In this case, now, for the first time ever, over the last consecutive couple of months, we now have smart contract capabilities via the EVM sidechain on the Xrpl. So think about the utility along the lines that unlocks for the digital asset XRP. Where now, for the first time ever, you're seeing protocols pop up like Strobe Finance, where XRP can be posted as collateral and you can access liquidity via lending and borrowing. This is a huge upgrade, considering where we've come from as XRP holders, where DeFi capabilities were relatively subdued to us and not available to us in previous market cycles. That is now all being unlocked for the first time ever. And whales clearly are not ignoring these yield generation capabilities, right? Now, I want you all to continue to listen to people that are heavily involved in this space. This is the CEO of Maple Finance, where I said here in this post on Snipverse, your digital assets aren't just numbers on a screen. They're powerful financial tools. For decades, the wealthy have been quietly using their assets as collateral to fund lifestyles, invest in new ventures, and grow their wealth without ever having to sell. Now, with a smartphone and an internet connection, you have that same access. As you all heard Dan Donnie mention, there's $20 trillion of daily transactional volume in the lending and borrowing markets between banks and financial institutions. So take that into consideration. What do you all think they're going to be doing with these crypto assets? They're going to be posting them as collateral. They're not going to just be trading these digital assets or holding them like retail investors. They're going to be putting their digital assets to work, particularly assets like Bitcoin, Ethereum, Solana, and in some cases, even possibly XRP. Once those primitives are available and once custodial solutions are available for large-scale institutions to do those services or commit themselves to those type of solutions, I can almost guarantee you that will be something that XRP is utilized for in the future. So just take that into consideration via what this gentleman says here about how you can utilize DeFi to fund lifestyle purchases, access liquidity, and compound long-term wealth with your crypto.
The play that the very wealthy did over the last few decades was you hold your assets. You want to hold financial assets because as the dollar has been continually deprecated and depreciated, that pushes up the price of financial assets. One way inflation manifests itself is that the price of Apple stock goes up, right? Because a dollar is now worth less than it was before, which means the price of everything has to go up, including financial assets. So the very wealthy don't denominate their wealth in dollars, as in they don't keep it in cash in the bank. They keep it in financial assets or real assets, which appreciate. And I think for our generation, millennials, Zoomers, the newer generations coming through, a lot of them are priced out of the real estate market, which was what boomers accumulated most of their wealth in, and instead they're looking at alternatives. Real estate can't appreciate at double-digit compounding rates for the next 20 years because otherwise you're going to end up in a world where a house costs 30 times somebody's annual salary. So it's just mathematically impossible. However, Bitcoin compounded at 54% over the last 7 years. If Bitcoin continues to compound even at a rate north of 20%, it becomes an incredible asset for the younger generations to own, to accumulate wealth. And I think they should look at borrowing against that in the same way that boomers borrow against the equity in their house. So you retain the upside, you don't cop a tax bill, and you can fund lifestyle purchases and continue to compound your wealth.
Very well said. Now, although this gentleman is particularly talking about Bitcoin, understand that these primitives that he's discussing and talking about, lending and borrowing crypto assets in general, is becoming available for multiple different digital assets. So he's talking about the strategy that the wealthy tend to participate in, accumulating assets, and instead of selling those assets for cash, if you want cash to fund lifestyle purchases or buy yourself nice things or just maintain your wealth or avoid taxable events, you lend out those assets, you borrow cash against them, you keep exposure to the upside in terms of any upside potential, you mitigate taxable events, and you still have access to your liquidity. This is a huge game changer, and so many people are not paying enough attention to it because they're so fixated on selling their XRP for some high-end price, when in reality, the goal should again be to shift that mindset from HODL to how can I take my digital assets and turn them into active digital assets that pay me passive income. There's so many different DeFi strategies for you to partake in to shift that mindset. Here's another video breakdown of a protocol builder in this space that is allowing these DeFi primitives to become available to everyday average retail investors. So again, I said here, your crypto is more than just an investment. It is a tool. Use it. Most people are holding crypto and waiting for the moon. But the real power players, they are leveraging their assets, not selling them. Using your crypto as collateral means that you don't have to choose between holding and accessing liquidity. It's the best of both worlds. You can borrow cash or stable coins while keeping your long-term position. You can avoid, like we mentioned, triggering taxable events from selling, and you can put your idle assets to work. This is not just financial literacy, it's financial strategy. Knowing how to leverage your crypto opens the door to opportunity, growth, and freedom that traditional finance never offered to retail investors before. Your assets are only as powerful as your knowledge of how to use them. So ask yourself, are you just holding crypto, or are you harnessing the power that crypto unlocks?
And when you ask them what they want to do with their Bitcoin or what they would do with their Bitcoin, it boils down to two core use cases. One is the ability to generate passive yield on Bitcoin in Bitcoin terms, so not necessarily affiliated to tokens or points or anything else or exogenous to Bitcoin. And the other is the collateralization of Bitcoin. So not selling your Bitcoin, but using it as collateral to do more, to borrow stables, to open a position, right? And so Botanix is anchored upon these two core use cases, which is all going to be happening in Bitcoin. And so everyone that I've spoken to who has historically said, yeah, I would never do anything with my Bitcoin and bury it in my backyard. If you say that, okay, you're able to get 10% yield in Bitcoin terms, or hey, you can actually use your Bitcoin as collateral and borrow stables at 5%, which is what you're currently able to do on Botanix, that changes the tenor of the conversation because that is actually serving what people actually want and need.
So even though she's discussing and talking about Bitcoin, I really want you guys to focus. She's talking about two primary use cases, the ability to generate yield on crypto and the ability to post Bitcoin, in this case, as collateral, right? Lend it out, borrow against it, and generate yield. This is a huge unlock, and it is going to become available for assets. It's available for assets outside of Bitcoin right now, particularly in assets that I hold in my portfolio, and most likely you guys watching this do as well, like XRP, HBAR, XLM, XDC, so on and so forth. All of these DeFi primitives are going to become available as time progresses in a mature, regulated, compliant environment. And it would again behoove you guys to take charge of your education and learn about these things. So that way you can take advantage of this new digital era. Coming over here, shout out to Metallicus Intern on X. He said $3 million in HBAR on Metal X app, and we have not even started yet. Now, this is so phenomenal to see because, again, it coexists with what the whales are doing, people that have hundreds of thousands, if not millions of dollars invested into HBAR and what they are doing with it. This was just recently announced on August 27th. Hedera HBAR is now live on Loan Protocol, where individual users can instantly lend and borrow your HBAR. And so if we come over here, looking back, August 27th was, as of time of recording, was literally a week ago. And now we can see, fast forward a week later, there's over $3 million in TVL locked in the lending side of the Metal X app. So right now, there's over $3 million earning 4% APY on HBAR. This is huge. And so I myself am actually participating in this, where I said here in this post, all it takes is a mindset shift. So prior to this unlock on MetalX, giving the ability to lend out your HBAR and generate yield on it, all of my HBAR was just sitting idle in my cold storage wallets. But now I'm tired of that. I'm done sitting down waiting for some bull market cycle. Who knows when that's going to come? A month from now, 2 months from now, a year from now? Honestly, now I could care less. All it takes is a mindset shift from hodl to hodl and earn. I still have access to all my HBAR at any moment in time that I want to withdraw that from the platform. But while it's sitting there, while I'm hodling it, while I'm waiting for upside price appreciation, I'm earning 4% on my HBAR. I've held hundreds of thousands of dollars worth of HBAR for years, just sitting there doing absolutely nothing. Now, I'm deploying over 1 million HBAR into Loan Protocol to start generating daily income. Now, I'm not encouraging you guys go out there and deploy on the Loan Protocol by any means, because my risk tolerance might be substantially higher than your risk tolerance, depending on a couple of different things like my income, my passive income, and just my overall exposure to these markets, knowledge, and education. However, this is the power of DeFi. And regardless if you deploy now or you just learn about your ability to deploy in the now by reading white papers, by watching panel discussions, and by just tapping in and educating yourself, it is not just about hodling and hoping anymore. It is about putting your assets to work while still believing in the long-term vision. Passive income, real yield, full control, no middleman, no banks, directly in a wallet that is built for both retail and institutions in the WebAuth wallet. The future is not coming. It's already here, y'all. It's already here. This is exactly why the Wealth 28 Club is here for the long run, because we're paying attention on earning yield daily, compounding that yield daily, and zooming out and have a long-term horizon perspective. All right. So this was just absolutely phenomenal. Super happy that this unlock was available on MetalX, because I was so tired of just having my HBAR sit in my cold storage wallet. And I've been accumulating HBAR for like 5+ years now. So I have a substantial amount of HBAR. I did not deploy all my HBAR on the Loan Protocol, but I did deploy a substantial amount of my bag of HBAR, just to, again, be transparent with you guys. Now, to show you guys some documented proof that from large-scale institutions, this is happening. This is happening. It's taking place and taking shape right now in the moment, which should give you guys courage to say, okay, look, if the institutions are doing this, shouldn't I wake up and start to pay attention and move where the money's moving? So we take a look here at this document from July 2025 from BCW Research titled Institutional Digital Asset Staking Report. If we come over here, it talks about the arrival of large-scale institutions and their customer bases into crypto is happening in real time. And it gives a list of all the organizations that are active in this space right now, again, according to this report. Particularly zooming into this one page, it says, these institutions are not just testing out the technology like in previous market cycles. Rather, they are building with it. They're deploying capital and they're onboarding their large customer base, and institutional capital is finally here. So where do institutions go next? There are various entry paths, and every institution's journey will be different. But if we try to generalize a common pattern, we see progression similar to the ones below. Then down here at number 7 and number 8, it talks about yield generation, lending pools, vaults, staking, so on and so forth. Increase yield on assets via different forms of staking, and beyond staking, increase yield in methods like lending, pools, vaults, etc. This is huge confirmation from a large research firm that does institutional research, telling you guys how these institutions are going to onboard into this space. Long-term investors and institutional capital will also flow into other yield-generating activities, specifically DeFi primitives like lending and vaults. To wrap this up, then if we come over here, considering what Dan Donnie said about how there's over $20 trillion right now in lending and borrowing activity between banks and financial institutions daily, and how digital assets themselves don't really have any intrinsic value. It's what you can do with the digital assets, like posting them as collateral, borrowing cash against them, that makes them valuable. Well, this is again happening in real time. The stage is being laid for all of this to take place. If we go back to July 30th, 2025, I want to revert your attention back to this announcement. Jelly C, A leading digital asset investment manager today announced a strategic relationship to join a recently launched Xrpl Collateral program with OKX, a leading cryptocurrency exchange and on-chain tech company, along with Standard Chartered, a leading international banking group. Jelly C has selected Franklin Templeton's tokenized money market fund as its preferred trading collateral. The collaboration allows Jelly C to utilize cryptocurrencies and Franklin Templeton's tokenized money market fund as off-exchange collateral for trading on OKX while using Standard Chartered, a globally systemically important bank, as the custodian for their collateral. This initiative significantly enhances security and capital efficiency for Jelly C while maintaining the highest standard of security. So, long story short, this program enables the ability for Jelly C users to post crypto and tokenized money market funds as collateral, which just goes hand in hand with what Dan Donnie said at the beginning of this particular video breakdown. Moving on, if that's not enough for you guys to show you all that this is happening in real time, here's a more recent announcement, September 3rd, 2025. And this aligns with a research document that I will end today's video breakdown on. An announcement from Ondo Finance saying Wall Street 2.0 is here. Ondo's global market is now live, providing one of the largest ever selections of tokenized US stocks and ETFs on chain with liquidity of traditional finance starting on Ethereum. 100 plus assets now live with hundreds more on the way. So tokenized stocks are now fully coming on chain. Well, if in traditional markets, larger financial institutions and whales in this space were doing what with their stocks? Lending them out, borrowing cash against them, maintaining their upside exposure. And now all of that's coming on chain in tokenized format. What do you think they're going to do again? They're going to reciprocate that same exact process. And then here it goes on to mention Ondo's global market launches with support from many of the world's leading applications and platforms, including, look at that, OKX Wallet. And we've already seen the announcements in recent times that OKX Wallet is involved in the ability to post cryptocurrency assets as collateral. To continue, it says, building for the open economy. The current investment ecosystem is broken. Global investors have historically faced barriers to access the $64 trillion US securities markets due to high fees, limited access, transfer frictions, platform fragmentation, and geographic exclusions. These problems have persisted for decades, locking millions out of capital markets and stifling innovation. Ondo Global Markets breaks through these limitations and transforms how securities are issued, accessed, and traded. Now, I want to pause right there because this one piece to this thread goes hand in hand with this document over here. We scroll up to the top of this just to show you guys that this is from a large research organization. This is the Global Scientific and Academic Research Journal of Economics, Business, and Management. And if we come down here to page 72, to read thoroughly through this with you guys, it says, real-world asset tokenization solves problems by allowing assets to be divided into smaller, more affordable parts. This process is known as fractional ownership. It allows investors to purchase a portion of an asset rather than the entire asset. For example, a commercial property with $10 million can now be tokenized into 1 million tokens, each representing a small portion of the property. An investor who does not have the resources to buy the entire home can now invest in just a few dollars to own a share. This fractionalization lowers the financial barrier to entry, making it possible for more people to invest in high-value assets. Then down here, it talks about, in addition, the ability to trade tokenized assets on digital exchanges allows for faster and lower cost transactions compared to traditional markets. Investors can now buy and sell tokens representing shares of the asset in real time, just like they trade stocks or cryptocurrencies. This instant liquidity allows investors to react more quickly to market changes and manage their portfolios more dynamically and access their capital at any time. Then right here it says, it also opens up the door for more sophisticated financial strategies, such as using tokenized assets as collateral for loans or participating in peer-to-peer lending. So here again, we have a research-based document talking about these exact same strategies and calling them sophisticated financial strategies, where you can take tokenized assets, post them as collateral, take a loan out against them, and continue to have access and exposure in the DeFi and Web3 ecosystem. This is a huge unlock and one that should not be ignored. Hopefully, after going through today's video breakdown, this allowed you to start to shift your mindset from this hodl mindset to how can I start to get my digital assets working for me? How can I maintain and stay in the crypto positions that I hold while expanding and growing my wealth in the long term by participating in DeFi? As always, many blessings to you guys. Remember, none of this is financial advice. Today, I went over the loan protocol and how I'm personally lending out over 1 million units of HBAR to the loan protocol. That does not mean that I encourage you guys to go out there and do or participate in those same DeFi strategies yourselves. However, what I do encourage is that you guys go out there and you learn about DeFi, you learn about these capabilities, so that way when the timing is right, when you're comfortable, you can participate in DeFi to expand and grow your wealth as well. If you guys want to learn how we are participating in DeFi, what platforms we're interested in, or how we're getting our digital assets working for us, you guys can always head over to CYPRXtrading.com. You can tap in with us in the Wealth 28 Club DeFi University. As always, many blessings to you guys. Be cognizant, be aware out there, and I'll see you all in the next video breakdown.